Welcome back to some more property chat, everybody. Today I'm here with the legend Luke Ashby from Emerge Finance. He's a award-winning broker and is an absolute gun when it comes to all things first home buyers. So, Luke, how you going, brother?
Mate, appreciate it. Very good, very good. How are you?
Yes, good, mate. And it's nice to get into our backyard here at Sandgate.
Yeah, it's a ripper spot. We're very lucky to live in this part of the world.
It is a ripper spot.
Yeah.
And tell us this for people who don't know who you are or what you guys do. Give us a bit of a background about yourself and who you guys work with.
Yep. Appreciate the kind intro, mate. We're mortgage brokers based out of Ashgrove. Been a mortgage broker for a little while now. I specialise in the first home buyer space, so I'm really passionate about that. Myself growing up, I didn't get a lot of guidance in terms of how to invest in property or how to buy a property. We don't get taught anything in school, as you know. So I'm very passionate about trying to educate in that space, and that's why I specialise in the first home buyers.
Nice. It's funny you say that, hey, because I feel like there's so much uneducation around first home buying, traditional versus new ways of buying. You talk to maybe your parents and they always say, oh, you need this and you need that.
Yeah, you need a 20% deposit.
Right? Yeah.
Yeah.
And let me ask you this off the back of that. What are some of those biggest misconceptions you find with the first home buying? Is it the deposit? Is it other things?
Oh, mate, where do you start? There's so many. Like 20% deposit is one, and probably the biggest one. You might have people close by to you, your parents or maybe a mentor that's bought 10, 15, 20 plus years ago, and maybe back then you needed a 20% deposit. And in a lot of cases it's ideal to have a 20% deposit, but you don't actually need it. There's a lot of really good ways to get into the market, still save on lender's mortgage insurance. Like for those that don't know, like to avoid LMI, lender's mortgage insurance, you've got to have a 20% deposit. There's a lot of really good ways. One's having a guarantor. So you've got family that's got got property and they've got equity inside that property and they're happy to go guarantor for you. Well, then you can actually get into the market with no deposit at all in some cases. So there's a really good option. There's also this first home buyer guarantee scheme, with a 5% deposit, or if you're single parent, 2%. Or if you don't qualify for those, you can pay lender's mortgage insurance, which obviously no one wants to pay, like it's a grudge purchase. But as you know, like the sooner you can get into the market and take advantage of the capital growth, stop renting, you're going to reap the rewards later on. Paying LMI is an enabler, not a disabler. So it's important to keep that in mind. One of the other ones I'll see is that I need to take a credit card out to get a credit score. That's obviously that will help build a score over time, but you don't need to. You don't need to go and get a credit card because I work with a lot of clients these days that are first home buyers that don't even have a credit score at all. They've never taken out credit, and so when we run a credit check, there's no credit report, but the banks are still happy to take that on. Like there's still lenders, like major lenders, that'll take your application on if you've got no credit score.
Yeah, okay. Do you find you have to work with certain banks in that case? Or is it just depending on the person?
For the no credit score?
Yeah, correct.
Most of them on the scheme, like first home guarantee scheme, will take it. So as long as everything else stacks up, like you've also got to have like a deposit, and you've got to most of the time have that genuinely saved and inside your account over a period of 3 months, 5% of the purchase price. So they look at the overall picture. So if you've got bad spending habits and you don't have a credit score, well then that's probably not going to, the lender might not look at you so favourably. It's overall picture when we're looking at that.
Gotcha, yeah. And I know there's a lot of talk at the moment, with younger people and younger generations sort of saying, oh, the property market just seems so unaffordable now, whether it's the deposit, whether it's, serviceability. Do you still think it's very achievable to get into the market?
100%. Yep. There's obviously limitations, like you mentioned. Deposits, bloody hard to save on top of rent these days. And then also borrowing capacity is a big one. So back at COVID times, rates were 2%. Borrowing capacity was a lot more, but it's gone to less than half now since COVID. So that's a big pain point. But no, it's not impossible. You've really got to basically have a chat with a broker and work out where you're at and get some plans in place, because you may have a HECS debt, or you've got a car loan or a credit card, and you can work towards paying these off to maximise borrowing capacity, and you can move a few levers around. If you're in a job where you can't earn any more income, that's where you hit a roadblock. But I think the main thing is, compromising on location, on the style of property. Come to the realisation that you most likely aren't going to buy your dream home straight off the bat. unless you've got a massive deposit, unless mum and dad are gifting you 500, 600k, I don't think you'll buy your dream home straight off the bat. So just keep that in mind. Be open to buying a unit or a townhouse. Yes, it's not ideal. Yes, you may pay some body corporate fees and things like that, but it'll stop you from renting. You'll take advantage of capital growth. Obviously, you know, you've got your finger on the pulse with townhouses and apartments in Brisbane at the moment, going absolutely ballistic because that's all people can afford. So prices are going up, and you might only have it for a couple of years.
Exactly, yeah. And it's the balance, right, between getting into the market versus, like you're saying, you've got to have some sort of sacrifice somewhere. Because it's always funny, you look back 10 years and we always thought that $1 million would buy us the world.
Yes.
And now you look at what $1 million actually buys you. And I think there was a video the other day, where was it? It was in Enoggera, I think it was. And absolute, pretty much a knockdown house. I don't even think they were letting people walk through the house. It was that bad.
Wow.
And it's a knockdown for, I think it's sold for like 1.15 or something crazy like that. So it's all about that balance of, you know, we're not going to buy our dream home first, again, unless you have an unlimited budget. But how can we get into the market and be balanced with that? And I think a lot of people even seem to be going to like the rent vesting these days. Now, I mean, with first home buyers, a lot of the time it's not worth doing the rent vesting for your first year because I know there's, you know, you've got to live in it for a year before so you can take advantage of the schemes. But are you seeing a rise in more people like looking to do that option of rent vesting?
Spot on. Yeah, we're seeing a lot of it now, particularly for those that can't afford to buy a property to live in Brisbane. You can't buy a property to live in the area that you want to live that suits your lifestyle. So rent vesting, for those that don't know, is where you buy in an area that suits your budget and you rent in an area that suits your lifestyle. So we see a lot of it, you know, couples renting in Newstead and still want to get into the property market, can't afford to buy a house in Newstead or an apartment, so they're buying perhaps an investment property out at Toowoomba or North Queensland or somewhere else in the country that suits their budget. So first, like, you know, if you can take advantage of the first home buyer incentives, that's like, I think, first point of call. Work out what incentives you're eligible for. Can you take advantage of that within your price point, the areas that you want to live in? Because you're only first home buyer once, you can only get access to it once. So see if that's an option. And then what I'm doing with the clients that can't fit that is, hey, have you considered rent vesting? Because that's a way where we can use the potential rental income on the new property to help service the loan. The interest on that loan is tax deductible as well. So often borrowing capacity sits a little bit better. You do tend to have a larger deposit to be able to make that work. But it's a really good solution to be able to get into the market, get on the ladder, have it for a few years, perhaps whilst your income's building. You might be a young professional on 80 grand a year or whatever it may be. As your income goes up, you'll be able to borrow more, maybe sell that property in 2-3 years time.
Exactly. And again, it almost comes back to your first house is probably not going to be your dream house, right? Because I think a lot of what smart first property buyers will do is they'll utilize their first home buyer schemes. They'll go out, you know, live in a property for a year. It might even be in Logan, it might be up, you know, Caboolture ways. You got to do what you got to do for a year, and then you can look at, oh, okay, well, potentially I want to move closer to the city now. I've utilized everything I can. Let's move out, go rent somewhere, and then just turn this into an investment property. Because if you can get a really good property that has good investment fundamentals and it's, you know, going with that capital growth and it's rising in value, and there's no reason why you couldn't look at doing the rent vesting thing, and in that way you could hopefully free up a bit more borrowing capacity, go look at maybe drawing some equity to buy another property, and then sort of start building your property portfolio. Go on there,
go from
massive
there.
Opportunity. Exactly.
Anyone that's living at home perhaps with parents not paying any rent or board, that's a prime scenario where we can look at the rent vesting or board vesting or not paying anything vesting option, because you're really going to maximise your borrowing capacity, and that's where I've helped a lot of people recently, is that they're living at home, mum and dad, not paying any rent or board and wanting to get into the market and can really maximise capacity.
Bit of a random question, but do you see a lot of first home buyers or younger people in general coming to you saying, hey, I want to build up a bit of a plan, like I want to buy 5 over the next 5 years, or they want to start building a portfolio, or are people more just wanting to sort of just get into their first one and they're not really thinking about those next steps?
There's a small percentage that are thinking about longer term. It's very hard to, number one, get into the market first. Like, I'm not going to ignore that. So I think a lot of people are just like, what can I do to get in? Like, I don't care what it looks like. Like, I'm really just keen to get in. I'm sick of renting. I'm sick of the rents going up. I'm sick of maybe the house is getting sold on me. I want some stability. So that's, I guess, that's been a big focus. But then there's a small percentage that are like, I want to buy this first one, but I've got plans to have 2, 3, 4, 5 down the track. And that's really good for us to know. And I ask those questions like, what's the goals? Not now, but longer term. Because it's important to think about that, because there's ways that we can structure the finance. So if you were to buy your first home and have the intentions to rent that out in maybe 2 or 3 years, there's ways that we can structure the finance to make that more, I guess, optimise that moving forward.
Gotcha. That makes sense, because I think for a lot of young Aussies as well, they see the property and they want to, they see the property game and they see it as such a huge vehicle, which it is in this country. There's sky's the limit in a lot of senses, depending on your income and those sorts of things. And I reckon, those first purchases, if you can really dial down and make them good ones, give yourself a really good base, because you also see a lot of the times people go wrong with their first one, even around like off the plan buying, and you hear some horror stories there. And there are some good opportunities in there, but if you can buy that first one really and just build that solid foundation to build off, I think that's where people do well the most. Hey?
And money's so expensive, right? So interest rates are around 6%, call it, but then the cost of housing is so expensive, right? So it's a very costly exercise. You want to make sure you're spending your money in the right areas and you've got the right advice. Like talking to people like Isaac to get a good grounding in where you should be investing your property.
And for your newer first home buyers that come to you, what is the one thing that is holding them back from getting into a property? You might get the young couple very optimistic, and then you look at their things. What's holding them back, you think?
There's a couple of things there. I think one would be mindset, and not perhaps being too afraid to dive into it. Maybe thinking that they're going to pay too much. Maybe think that the property market's going to crash. With that sort of view, you're not quite going to get there, I think. You've got to have the long-term view that property is going up over a period of time. It's time in the market, not time in the market. We hear it all the time. So I think that's one of the main ones. And I think committing to it. It's not a scary thing. It's a great vehicle, like you said, to build your wealth. Are
you seeing lots of serviceability issues these days, in the fact that maybe people have got a lot of Uber Eats spending, or maybe people have got the credit card limits or the car loans? Do those things really impact your borrowing when it comes to buying your first house? Spot
on. So banks work off the credit limit, so it doesn't matter what the balance is of your credit card, like they're working off the limit. So if you've got a 15k credit limit, that's going to impact borrowing capacity significantly. Also your HEX debt, there's a lender now that's looking at HEX debts a bit more favourably, which is great. And then car loans, etc., they're always going to impact borrowing capacity. They're the main things. That is a big pain point for a lot of people. It's a hard conversation that we have daily with a lot of people. It's like you want to aim to purchase a property up here, but your borrowing capacity is actually down here. And we'll guide you on things that you can do to help increase that borrowing capacity, whether it's paying down the debts, closing credit card, reducing the limits. There's also some pretty cool policies out there with the lender at the moment that allows you to rent a room out, and they'll claim they'll allow you to use $150 a week in servicing, which can tend to increase borrowing by about 30 to 50,000. So that's a big difference, right?
It's massive.
So important to consider your options around that. A lot of people these days will buy a house, and then have their mates rent out a room or whatever. So it's like it's happening anyway. Let's
all cash done.
But let's use it as to help get you into the market. So I think it's a great initiative. But just be careful around that and potential capital gains, things to consider. Like talk to an accountant before you do that sort of stuff.
And that's what I always recommend to people. They go talk to a broker first, because I think combination of interest rates as well as cost of living is quite high at the moment. People can be very optimistic until they go talk to a broker and they thought, I thought I could borrow 700. That's what the online calculator told me.
Oh god.
And then and then they actually talk to someone and get it done. It's like, I can actually only buy 500, and we all know that can be a slightly tough budget these days. Spot on. But it can also happen on the flip side of that, right? People could think, I'm not in a position to be able to buy. Like I need to wait and save a 20% deposit. Sure, okay.
I don't have enough income to be able to do this, blah, blah, blah. But you don't know unless you have a chat.
Exactly.
Like,
yeah.
just if you've got any ambition to buy a property into the future, doesn't matter whether it's in 12 months, 24 months, whenever, if you've got any ambition, have a chat with a mortgage broker.
Yep.
Work out what your options are, work out what first home buyer incentives you're eligible for, and get a game plan together.
Yeah.
Because if you're saving aimlessly, right, you're not going to reach your goal anywhere near as quick as if you knew what you needed to save towards as that goal.
Yeah. And I think, when you look at the cost of not being in a property as well compared to inflation and those different things, it's like, man, if you can do your best, save for a few years, work really hard at it, get yourself into a property, you're going to see a lot more growth in that property. And we always talk about leverage as well, right? So, you could put 100K in the bank, but guess what? It's only growing on that 100 grand. Whereas if you go buy it, use that as a 5% or 10% deposit towards a, what's that? Like
$1 million.
$1 million home.
Yeah.
Or then, you're leveraging your $100,000 to then see growth on $1 million property, right?
Yeah, spot on. Going up, say, 8% a year.
Exactly.
8% on 1 mil is a lot versus it's sitting in the bank.
So for newer first home buyers out there, they're starting on their journey now, maybe even just looking at putting a savings plan in place. What's the one piece of advice you would give those guys?
Like I said before, have a chat with a broker. You're aimlessly saving, you don't know where you're at and what you can do unless you've started that conversation, and have a chat with one that is an expert in the area, the stage of life that you're in. So if you're a first home buyer, chat to a broker that specialises in first home buyers. So they are across all the government incentives and what's coming up and how they can best help you get into the market sooner. Because as you know, you can't save as quick as the market's moving, right?
Yeah.
So there's some pretty cool changes coming up as well in the first home buyer space. Obviously, we've just had the election as well. So Labor are staying in, and they're going to bump up the price cap for the first home guarantee scheme up to 1 mil now. So that's going to be as of January next year. So obviously you've got to have significant borrowing capacity to be able to purchase up to 1 mil, but it will help some people, right?
For sure.
And there's no income caps, so you could be on 500 grand a year, like you are probably. But buy up to 1 mil and off you go with a 5% deposit plus costs. So there's a really cool changes happening. Last thing I'll just say is I do have a Facebook group for first home buyers specifically. It's called First Home Buyers Club Queensland. It's purely just a safe space. You can go on there, get the education that you need to make better informed decisions. Like I said earlier, I'm passionate about helping in this space, so that's why I created it. I've got people like Isaac in there, experts that can answer questions. You can ask them anonymously if you need to. Just go on there, get the information you need, and off you go. Just trying to help bridge that gap and help with the education side.
Perfect. Well, that's Luke Ashby, everybody, from Emerge Finance. Absolute weapon. I'll tag his Facebook group and also his socials below. So if you want to get in touch, looking to buy your first house, reach out and he'll be more than happy to help. Cheers.
Awesome. Thanks, mate.
Thanks, mate.
Cheers.